Hi everyone, welcome to today's webinar. My name is Fawad Razaqzada, market analyst with Think Markets. I am based in London, and in the room we also have my colleague Victor, who is joining us from Sofia in Bulgaria. So today we will be presenting the live market analysis webinar, which is a webinar mostly about technical analysis of major currency pairs, indices, and commodities. But we will also briefly discuss the fundamentals as well when it is needed. As this webinar is meant to be live analysis, please help us by writing comments or questions, and we will be more than happy to provide analysis on any particular market you are interested in. Before we proceed, please have a read through the risk warning. And these webinars are for general information only and are not intended to provide trading or investment advice. Any information relating to past performance of an investment does not necessarily guarantee future performance. Think Markets shall not be responsible for any loss that you incur, either directly or indirectly, arising from any investment based on any information in this webinar. Please remember that the spread betting and trading CFDs carry significant risks and may not be suitable for all investors. So most of the discussions will be on live charts on major currency pairs, gold indices. I think Victor is going to talk about Bitcoin as well and cryptocurrencies. This webinar happens every Tuesday, 11:30 London time. We'll touch on fundamental analysis, and there will be a Q&A session at the end. But if you have any questions as we present this webinar, please write them in the chat window. So what's driving the markets? Well, investors are continuing to kind of rotate into stocks that are more sensitive to economic growth after several vaccine candidates provided really good updates, which has raised hopes that hopefully we will be heading to more normal times in 2021. So as a result of this, we've seen stock indices go up. The dollar, which is a safe haven currency, it has gone down. And risk-sensitive currencies such as the Australian dollar have outperformed. As well as the vaccine optimism, we've heard that the ex-Federal Reserve Chair, Janet Yellen, she's been nominated as the Treasury Secretary. And also, the triggering of the formal transition process to Biden has helped to boost sentiment today. As well as stocks, oil prices have been going up. Crude oil prices are now at their highest level since March, on hopes that demand will bounce back while the OPEC will continue to keep the supply in check. So the dollar index touched I think a 4-month low earlier yesterday before bouncing back a little bit, but it is kind of weaker again today as we start the new session. Despite the optimism, some global leaders are warning that the vaccine will not be a quick fix, and a fresh downturn will be something that could happen in 2021. So there are certainly risks that you need to take into account. Also, from a longer term point of view, if things start to turn positive again, then central banks will have to tighten their monetary policy stances, right? So they may have to reduce their huge balance sheets at some point next year. That's something that could weigh on stocks in the future, but it's a worry that could come back to haunt the markets and investors next year, probably. Right now, though, everyone is just focused on the vaccine optimism, and momentum is certainly bullish right now. So from a trading point of view, as traders, the most important thing to take into account is the now moment opportunity flow. So just stay focused on what the markets make sense, on whichever markets that make sense to you, and go with the momentum rather than against it. until the charts tell you otherwise. Right now, the vaccine optimism is the main dominant theme, and economic data has not been too much of a focus. Although that being said, we've had a couple of economic pointers from the US and UK yesterday. It was the manufacturing and services PMIs. They came out stronger than expected, which has raised hopes that perhaps the latest lockdown may not cause too much of an economic downturn. In terms of data for the rest of the week, we have consumer confidence from the US later on today. UK's autumn forecast statement is on Wednesday. Wednesday will be a big day for US data as well. We have GDP, personal income and spending, and the FOMC minutes. So the data dump on Wednesday is because there will be a Thanksgiving Day holiday in the US on Thursday, and most US investors will be away for a long weekend on Friday as well. Okay, so let's now. So basically, from this you can see that today and tomorrow are going to be most likely the most busiest day of the week, right? Days of the week. Thursday and Friday are likely to be kind of quiet with the US investors being out. So let me start off with the chart of the S&P 500. As you can see, it has been continuing to print bullish price action. And now it has kind of held this area of support, which was formerly resistance, this gray shaded area. Spent a few days trying to hold around there, and it looks like the bulls have come out on top once again. And if it breaks through this short-term bearish trend line, a continuation higher is most likely to happen towards a new all-time high. A similar picture can be seen across the board. Here we're looking at the German DAX index, or the Germany 30 CFD, which is likewise looking quite bullish. This German index has actually been in consolidation for 3 or 4 months now, probably a bit longer than that. But right now it's trading near the high of the range, and it's recently been consolidating inside this tight range. And this consolidation has allowed the momentum indicators like the RSI, for example. Let me just put that on the chart. So if you look at the relative strength index, it was looking quite overbought around 11th of November, but because of the consolidation, it's kind of moved a little bit lower, not significantly, but it's not as extreme as it was on the 11th of November. So the consolidation near the highs has allowed the overbought conditions to be worked off through time rather than price action, and this is potentially a bullish scenario because now it is possibly gearing up for another break to the upside. So from here, it looks like a new high above the post-lockdown high that was hit in September is on the cards. And then beyond that, we have the all-time high that was reached just before the lockdown in February. And then beyond that, it's really anyone's guess where it could go. But those are the first 2 targets from a bullish point of view. From a bearish point of view, if the breakout attempt fails and we go below the shaded support region, in the short term, that would be a bearish development, which could then lead to a drop towards this support level here, which was previously resistance and the point of origin of the latest breakout. So that level right there at 12,593 is the next downside target in the event the index turns sharply lower from here. Similar picture can be seen for the FTSE. This chart looks a little bit messy, but let me explain what's happened here. The FTSE hasn't been as strong an index as the US and the German DAX index, as the US indices and the German DAX index. because the FTSE has lots of stocks in it that are considered to be value stocks, those that go up and down depending on the economy. Now, in recent times, because of the vaccine optimism, those value stocks have been more in demand compared to technology stocks. And that's why the FTSE has been able to rally really sharply over the last several weeks, or the last couple of weeks, I should say. The FTSE has broken above the 21-day exponential moving average and the 200-day moving average, thus providing us a objective way of telling that the trend is bullish. In addition, it has broken through this area of resistance right here, the shaded region, which was previously resistance. We have broken through it, and look what's happened here. The index has held its own above that area of prior resistance. So previous resistance has now turned into support. Really important, right? And so now what we're seeing is the index is poking its head above this area of consolidation here. So a daily close at or above current levels would be considered a bullish scenario. If so, then it could lead to much higher levels from here. And a couple of levels to watch from a Fibonacci point of view, I have drawn on the chart. So to clarify what we have here, we have the big downswing here from point X to point A. I have left out the 61.8 and 78.6% retracement levels of that downswing. Then we have this downswing from point B to point C. And because we are very close to the 100% extension of that, I have deleted all the retracement levels, leaving out the extension levels. So we have the 127 here and the 161.8 coming in around here. So as you can see, the 78.6 of the larger downswing and the 161.8 extension of the smaller correction kind of converges around the same area. And this area happens to be the projected point D of an ABCD pattern. So if I draw my ABCD pattern from here, so this is point A to point B. So from point C to point D, from point B to point C. And what I could do now is replicate this one from point A to point B and paste it here. So if you clone that and bring it here, you can see that it projects a point D around those Fibonacci extension levels. So what I've just described is called a Gartley pattern. Okay, it's a Fibonacci based pattern. Now, usually a Gartley pattern such as this one would be a sell pattern. It would tell you to sell here at point D, but I view it as an objective rather than an area to get short at. So for me, that's where the FTSE is possibly heading towards. It's an objective target based on the ABCD Gartley pattern. Anyway, enough of the FTSE. Let's go on to the currency markets. And I'm going to start off with looking at the Aussie. Now, the Aussie, previously we were talking about the range that the Aussie was trading at. It was, the high of the range was at 73.40 and the lower end of the range was at 72.45-ish. We want to see either a clean break below here or a clean break above the high. As it happened, the Aussie kind of continued to consolidate inside a consolidation zone here. But as you can see today, it has broken above the high of the range. This is quite bullish if it can hold the breakout. Okay, so if it can hold the breakout, then what we want to see next is a continuation to take out liquidity that would be resting above this high here. So people who are short, some of those guys will have placed their stop loss orders above there. And if the trend continues, it's those stops that will be taken next, right? So that's why this is my first target above the most recent high. And then thereafter, you could plot your Fibonacci extension levels and so on to get some objective targets. So if you draw your fibs from this high to this low here, the 127.2% extension comes in at 75.28, followed by the 161.8 at 76.75. So those are some of the levels that the bulls might target if we can hold the breakout from this consolidation zone right here. Okay, so the alternative scenario is obviously if this breakout fails. So now we're above it. Let's say it comes back down and then goes back inside the range and it just drops. If something like that happens, then any rounded retest of this blue level could lead to a drop. So this is the alternative scenario, the bearish scenario. For this to happen, we first need to see price going back inside this range and show a bearish looking candle. And then ideally what we want to see is then a follow through to the downside to break support. And then once support is broken, then we can look for potential trading opportunities on the downside. But the base case scenario is that it will most likely go higher because of the ongoing positive sentiment towards risk assets, and the current trend is bullish. So we prefer to go with the trend, and my preference is the bullish story rather than the bearish story. So some of the other markets that are trending similarly are, the pound against the dollar. If you look at the pound here, it's rising inside this bullish channel. It's getting ever closer to that 135 handle, which is the high from last year and also the high from this year as well. Those two highs come in at or around the 135 handle, and that's where I think the pound is most likely headed from here. Now, as well as obviously vaccines and whatnot, in the UK, people are growing optimistic that the government is going to strike a deal with the EU on Brexit, and that's what's keeping the pound supported, which is why the pound is doing relatively better against the compared to the euro. So if you look at the euro pound, it has been trading lower, and I think more losses could be on the way because what's happened here, we are in a bearish channel, but on this particular day where the arrow is pointing, we broke the most recent low. Yes, it wasn't a clean break, but we broke that low nonetheless. So now if we go below this black line and hold below it on a daily closing basis, then any rounded retest of that level could lead to a potential drop towards 87.
So if I can jump in here, Fawad, how much of the Brexit story do you think is already priced in?
I think since September, since the middle of September, there's been renewed optimism about Brexit, because before that it kind of lost some of its traction. The talks lost traction, and then then all of a sudden things started to happen again. Some of Boris Johnson's close allies in the government, they have left or they resigned, and that has raised the speculation that some of his Brexiteer colleagues who have left has possibly paved the way for a deal to happen at some point in the near future. But to answer your point, how much of that is priced in or baked in? I think some of it has been baked in. I think there's still scope for further pound strength if and when the deal is strike. Yeah. So yeah, some of the positivity is priced in definitely, but not entirely. Yeah.
So you don't foresee a scenario of buying the rumor and selling the news?
Not immediately. I don't think immediately after the announcement. Maybe maybe if the deal is announced, let's say tomorrow, for example, then I would wait a few days after that before potentially looking to sell the news. I wouldn't do it on the day of the announcement. So yeah, there is some scope for that, but I don't think it's something that I would be entertaining. I would rather look for bullish pound trades ahead of the news, rather than wait for the news and then trade against it. Yeah,
trying to short it. Yeah,
but you could obviously that's another really good idea that you've mentioned here. You can trade against the trend, but it's all about timing the trade, because that's the most important thing.
If you can switch over to some longer time frames, we have quite some strong levels in both in the euro, both in the pound US dollar in the cable trade, where we have had this 134, 135 area contain the upside since basically June 2018.
This level right here.
We visited it 4 times. This would be the 5th time. And there should be quite some quite a fight to hold stops above, or assuming those are knocked out, we could see quite the short squeeze and subsequent rally in the British pound it could go on for months, really. We don't know.
And interesting that you mentioned this level here. It has, as you mentioned, been tested several times here, a couple of times here. I think the more a level gets tested, the more likely it is that it will break. Obviously, longer term levels are a little bit difficult to say, but if resistance is really strong, price should not come back to test that level again. It should just drop from there. So the fact it's coming back to test it, and we're seeing progressively shallower retracements compared to this retracement or this drop, makes me think that sooner or later we'll break through it, rather than
and it's also that there's also a double whamming, if you want to call it, from a technical perspective. If you switch over to the monthly chart, and there is this huge trend line going all the way from 2008 through 2014, and it's about to get tested.
That's interesting. I did not see that one. That's interesting.
It's traders who are trying to short the pound here. You just make sure you have your stop losses tight, because if this ball gets rolling, it might be too heavy to catch.
Very interesting. I did not know about this bearish trend line on the monthly chart of the cable, but here it is, and we're right about there testing it. So obviously it could go either way, but the current trend is bullish. So I would go on then.
Go ahead.
I was just going to say,
from a fundamental standpoint, it's we have the fundamentals necessary for the British pound to get stronger. Really, this is my opinion.
Absolutely.
It's like we have had this dark cloud sitting over our head for
several years, 3 or 4 years at least.
4 years.
And
it's finally about to recede, and we could we have this false break reversal, and we have all the complications in the US. Obviously, I've been particularly surprised with the tight range in the euro dollar, which has held for 4 months now, but despite this range may keep keep on ranging, but the British pound could well break out against the dollar. We don't know that. And if you look at the euro pound chart, the situation is pretty similar on a long-term basis. We've had these multiple attempts to cross over, to hold over 90, and they have all failed. And the fundamental driver for this scare trade is about to disappear.
Yeah.
So hold on to your hats. This can be quite the move. I'm just saying.
Yeah, no, you're right. Interesting point you raised about 90. 90 is obviously a psychologically important level, and as Victor mentioned, we have tried to break through that level on a number of occasions over the last several years, and each time the breakout attempts have been futile. Now, the most recent attempt, we had a sharp rally right there, and what's happened is if you mark out the low of that big move up, this black line here. Everyone that bought that, they will have now been trapped. So if we get a break below that black line here, I think that would be really bearish and could lead to a significant move to the downside.
Yeah, we could see a very fast drop towards, the pound really likes to do this, actually.
Yeah.
We see a really, really sudden move in the pound quite frequently. Every few years, yeah. I mean, every few years.
Yeah. On the longer term time frame.
Yeah.
Right. Enough of the pound. Shall we move on to the next currency pairs? Let's talk about something quite different. Turkish Lira. Turkish Lira is really interesting because the lira has been falling to record lows against the US dollar and other major currencies because of the ongoing economic situation in Turkey, where inflation has been rising rapidly, economic growth has been falling, and there's been a currency crisis in the country. Funds have been flowing out of the country, and it's all because, partly because of the president who has been against hiking interest rates until recently. In the last few weeks, he replaced the central bank head and his finance minister as well. And these new guys have promised to turn Turkey's finances around. So a few weeks ago, right here, the Turkish central bank decided to hike interest rates by something like 4.5 or 5%, and that led to an immediate fall in the dollar Turkish lira. So the Turkish lira rallied, but it has been rallying, or the rate has been falling for a couple of weeks now in anticipation of that move by the central bank. So when the central bank decided to cut interest rates, the Turkish lira strengthened further, hitting this key level of support at 7.5 before bouncing back. Now, rates have returned to the point of origin of the breakdown right here at around 8.03, which was formerly a key support area. So with the trend line broken and the government and central bank doing their best to support the Turkish lira and sentiment turning positive towards risk-sensitive assets like emerging market currencies. This is
stocks.
And stocks. This is exactly where price should hold now if this is going to drop from here. So if you haven't considered the Turkish lira until now, maybe now I think it could be a good area to look for bullish setups on the Turkish lira or bearish setups on the dollar against the Turkish lira, right where we're trading at the moment. So what I think might happen. Go on.
It's been a one-way trade.
One-way trade, yeah.
About 5 to 6 years, I think.
Yeah. So I think something like that might happen going forward. I'm being a bit optimistic, obviously, but with the world economy going back to normal, or more towards normal, I should say, with the vaccinations, and that's a big F, okay, in 2021. I think demand for Turkish assets will rise because people will be going back to back on holidays to Turkey or vacations, and Turkey is a popular destination for many people, especially in the Muslim community, because they offer everything they need, and also for many Europeans, it's a nice destination to go to get some a suntan, and it's relatively inexpensive compared to Croatia or other places. So I think tourism is going to rise. Demand for tourism is going to rise for Turkey, and that's going to put upward pressure on the Turkish lira. As well as that, the central bank is now hiking interest rates to control inflation, and the higher interest rates will attract investment into the currency, because elsewhere interest rates are very, very low and negative in some cases. But if you buy the Turkish lira or invest in Turkey, investors will be getting a very positive return in terms of interest rates. So this interest rate differential is going to grow in my view, and over time this should help to support the Turkish lira. So yeah, that's why I think it's gonna fall. I could be wrong. If it goes back above this broken bearish trend line, at that point I will drop my bullish Turkish lira view until I see some further price action. But right here is where I think it's it's got the best chance of going down from where it is at the moment. Let's talk about other assets because we are running out of time. Oil prices have been going up, as I mentioned. Crude oil has been trending higher because of hopes that demand will recover as people start traveling again. So prices have broken above 44, which was previously a key area of resistance. That level has held, and prices have now continued higher. Now we are testing the highs that was reached in August, and so there's a possible scenario where we could see a false break scenario here, which could lead to a short-term downward move. But ultimately, I think this thing is going to go up because of the fundamental situation. Key support in the short term comes in at 45, 45.20 or 45, around about there. So that level needs to hold now for rates for prices to continue pushing higher. A breakdown below that level could open the way for 44 again, and then if we break through 44, decisively, then that would complicate the short-term outlook. But ideally, we'd want to see 45 hold as support now, leading to further gains. Gold has been interesting. We marked out this bearish scenario in the previous webinar because it was looking really heavy. People were moving funds into racier equity markets and other risk-sensitive assets because of the vaccine news, and away from safe haven assets like gold and silver and whatnot. So gold has now broken below its key short-term support range and it's dropped to where we thought it will drop, between 1800 to 1818, where we think there's a small possibility we may see a bounce there, but ultimately the trend has turned bearish for the time being. And Victor was going to add something here, weren't you, Victor?
Yeah, the only level that remains intact is pretty much the 200-day moving average.
Yeah, which
is around 1800, and really, if we go below that, we could see some quite the move as well. I don't know if you recall the last bearish move in gold that happened in 2013. after some
2014. So somewhere here.
13. Yeah. Well, basically it dropped from 750 to yeah. And this is very different what we're observing right now, since we've had a rally from 1100 to 2100 really, which is almost a you know,
it was a one-way move, wasn't it?
It was a one-way move. We have basically reached the point where we could see a significant correction. I wouldn't rule out a 50% correction on this move.
Yeah, a 50% will take you to 16, 17.
Yeah.
It just needs to get through that, you know, from a trading point of view. It needs to get through 1800, I think, on a weekly closing.
1800 is the key level that has been, you know, I've even heard some chatter about strong interest around 1800, and we'll see how that goes. This safe haven seems unnecessary right now, while we have the old famous digital safe haven, Bitcoin, knocking out figure after figure and completely destroying the every correlation really.
Just before we touch on Bitcoin, I'll come back to Bitcoin, Victor. Just wanted to highlight a fact that over the past several years, gold has been going up along with the S&P 500 or the stock markets. This orange line is the S&P 500. As you can see, it has had a strong positive correlation with gold. From March, both of them are going up, right? So right now, S&P 500 is making a higher high, gold is making a lower low. Is that correlation breaking down, or is gold going to catch up to the upside again? So don't rule out a potential return for gold, because ultimately, you have to remember what has been driving gold prices. It's the interest rates falling across the world, and that is not going to change, very soon. It may well change later on in 2021, but right now, interest rates are going to stay low for the foreseeable future. So I just want to highlight that fact, and just going to put a Bitcoin chart here.
I was going to add to this correlation that the current break could also there is one more scenario that stocks catch up to gold and drop along with it. Because
that's another scenario.
There is, despite all of the optimism surrounding the vaccine and the vaccines, to be more precise, there remains a key factor in convincing people to actually apply those vaccines.
That's going to be a tough task. It's not going to be easy by any means. But here's the correlation between Bitcoin and gold, Victor.
Yeah. So as we can see, it's non-linear. Basically, there are these moments in time when Bitcoin really takes off for no apparent reason and correlation to other financial assets out there. So it does a thing on its own, and once again it proves to be some sort of asset that is driven by a different fundamental backdrop. And what we currently see, I think, reflects the uncertainty about the future and the mania of tech people to try to be independent from any centralized institutions. Now, personally, I don't really buy it. I mean, I don't really buy that financial, that traditional finance, governments and so on are just going to be sitting and watching money flowing into Bitcoin instead into the economy to drive a recovery. And you know, we back in the 30s during the worst recession, well, the previous worst recession before we had the COVID one, gold was outlawed. Owning gold was outlawed. I don't see why can't we have Bitcoin getting outlawed.
So you reckon? So you think that the rally is going to falter somewhere?
No, not necessarily. I'm just saying that don't count on this to be the investment of your lifetime.
I mean, it has been an investment for some people who got it right at the right time, right at the right price. But obviously, around current levels, there's so much it can go up. But yeah, I mean, it's getting very close to the 2017 high, and you know, we're betting distance away from it.
That's obviously going to be key.
Yeah. So I think the way prices have been behaving, making higher highs, high lows, very shallow retracements is strongly indicative of a strong market. Obviously, if it wasn't strong, it wouldn't be here. But given that we're so close to the 2017, I think we are going to create a new high.
Yeah,
but what happens thereafter remains to be seen. If we get a false break above 2017, that could then lead to a potential correction. A clean break above and hold, then that would be bullish for the foreseeable future. In the short term, if we go below the most recent low, which was here at 17,610, that was the last low prior to the latest rally. If we go below that level, that would be a short-term bearish development because we will have had our first lower low. So that would be the line in the sand for me in terms of the short term. Longer term, that 2017 high is where I think it's going to reach to.
And then again, Bitcoin never had a competition. Back in the day in 2018. Now we have Tesla stock, which is nearing a market cap of $500 billion. How about that?
Wow, that's huge. That's huge. Tesla, you said, yeah. Let's put on some stocks here as well. Where are you, Tesla? There you go. Oh, it's hit a new high yesterday.
Yeah, and it's breaking out $20 above yesterday's closing price today. So watch out for this one. It's already trading more expensive than all the other automakers combined.
Yeah. A few other stocks to watch out for. I posted them on Twitter a few days ago. I don't know if you guys saw them. They include, let me find them, Alibaba. I think it may have formed a reversal here. Yes, it closed lower yesterday, but the fact that there's a false break below this low and a nice bullish reversal, I think that could be a key turning point. But more to the point, it was Snap, I think, that caught my. Oh yes, it's already gone. I was looking at how prices had been consolidating here, and there was a break of this trend line when I posted this chart on Twitter. But now, as you can see, there's been some follow through. So Twitter could come back down in the range, but ultimately the path of least resistance is to the upside. And similar picture was on another stock. I think it was eBay. This one has broken this trend line and held key support here. If I zoom out a little bit, you can see that that right here.
Yeah.
Can't put on exactly on the high. That's gonna annoy me. Let me just, yeah, this was the high in 2018. And if you go back in time, go forward in time, you can see that this level has been tested a few times. And finally, we broke through it on early November. We claimed it and we held above the 200-day moving average. And now we've broken through this bearish trend line. So eBay is looking quite bullish from here, in my view, and unless it goes below this level at 47. All right, guys. We have run out of time, believe it or not. Thank you so much for joining us.
Do we have any questions, perhaps?
Yes. Any questions, guys? We got a few minutes to answer any questions you have. But I can't see any. Can you, Victor?
No.
No. Okay. It looks like everyone is good then. In that case, we will speak to you same time next week. So make sure you join us then. Take care and, be careful out there. Best of luck and all that. Speak to you next week. Take care. Bye-bye.
Take care. Bye-bye.